Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 2. This is section G4. This is a remembering and understanding topic. Understand when an entity is required to have a single audit in accordance with the audit requirements of the Uniform Guidance, including the identification of federal awards and major programs. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. Again, it's free, it's only 1 hour long, and we will teach you the key ingredients to passing the CPA exam. After you watch that, you're going to want to learn more, so make sure you also check out becoming a SuperfastCPA Pro member. SuperfastCPA Pro members get access to the full 10-question versions of these videos that we put on YouTube. On YouTube, we're only going to go over 5 questions, but again, SuperfastCPA Pro members are going to get access to the full 10-question video so that they can get a little bit more practice and a little bit more understanding. So make sure you check that out. With all that, let's dive straight into the questions for this video. All right, here we are at question 1. Let's just dive straight in. Which of the following best describes a single audit? So if you have no idea what a single audit is, that's what we're going to learn in this question. Let's go through the options. Option A, an audit that combines an entity's financial statement audit with an audit of its federal award compliance. Let's go through option B, a specialized financial statement audit that focuses solely on an entity's internal controls over financial reporting. Option C, a limited scope review of an entity's major federal programs to ensure they are operating efficiently. Or option D, an internal audit conducted by an entity's management to assess compliance with grant agreements. So again, which one of these is a single audit? If you have no idea, that's okay. We are going to use this question to start learning what a single audit is so that we can kind of have that as a base for the rest of the video. So let's go ahead and go to the explanation. All right, here we are. The answer is A, an audit that combines an entity's financial statement audit with an audit of its federal award compliance. So let's walk through this. It's pretty simple, pretty straightforward. A single audit is a comprehensive audit required for entities that receive significant federal funding. And we're going to talk about that in another question, like what that actually means. It includes both an audit of the entity's financial statements and an audit of its compliance with federal award requirements. This process ensures that federal funds are used appropriately and in accordance with applicable laws and regulations. The audit is conducted in accordance with the Uniform Guidance, and technically that is 2 CFR Part 200, but Uniform Guidance is good enough. So again, that's the idea behind a single audit. It's just a combined financial statement audit with an audit of the federal award compliance. That's the simple idea there. Now let's go through the next questions to start learning more about what auditors need to do and how you determine if something needs a single audit. Let's go through those questions. So let's go to question 2. Okay, here we are at question 2. Under the Uniform Guidance, when is an entity required to undergo a single audit? Okay, so now we're going to actually learn when you have to do a single audit. Option A, when it receives any amount of federal funding during the fiscal year. Option B, when it expends $750,000 or more in federal awards during the fiscal year. Option C, when it receives federal funding for capital projects regardless of the amount. Or option D, when it is subject to generally accepted government auditing standards or GAGAS regardless of funding sources. So in which of these cases is it required that an entity has to have a single audit? If you don't know, that's okay. Again, we are using these questions to learn. But if you've kind of heard this, if you kind of have an idea, then you might know the answer. If not, again, let's go to the answer to learn it right now. All right, here we are. The answer is B, when it expends $750,000 or more in federal awards during the fiscal year. Now, you may have heard that number at some point if you've been studying, so let's kind of dive into that. Historically, a single audit has been required when an entity expends $750,000 or more in federal awards within a fiscal year under the Uniform Guidance. However, a rule change in October 2024 increased this threshold to $1 million. Since CPA exam content may take time to update, the exam could still test the $750,000 threshold. And that's kind of what I'm seeing. From what I understand, $750,000 is probably the number you're still going to be tested on as of right now. Now, if you're seeing this video at a significantly later time, maybe you've started seeing $1 million in your review course or whatever the case is. So just know that eventually this threshold for single audits will be $1 million. But I'm pretty sure that right now, as of March 2025, this is still $750,000 as far as testing for the CPA exam. So just know that it'll eventually be $1 million, but I'm pretty sure you're still going to only need to know $750,000 for now, but that may change. In a single audit, the auditor assesses compliance with federal laws and regulations, evaluates whether management has identified laws and regulations with a direct and material effect on financial reporting, and obtains an understanding of internal controls over compliance. The auditor also tests these controls and reports on any material weaknesses or non-compliance. So this question was great because we not only learned when it's required to have a single audit, so again, when they expend $750,000 or more in federal awards, but also we learned some of the responsibilities of auditors when it comes to single audits. They have to test for compliance with laws or regulations. They have to make sure that management knows the laws and regulations and can tell if those are going to have a material effect on the reporting. They have to understand the internal controls. These are the kinds of things that auditors have to do when they are doing this single audit because they are auditing the compliance. So we learned a lot more about single audits there. Now let's go to the next question. All right, here we are at question 3. How is materiality determined in a single audit? So we've talked about materiality in other videos, but how is it determined specifically with this kind of audit? Let's go through the options. Option A, materiality is determined for the financial statements as a whole and separately for each major federal program. Option B, a single materiality threshold is applied to both the financial statement audit and the compliance audit. Option C, materiality is only considered at the financial statement level as compliance testing does not require a materiality assessment. Or option D, the Office of Management and Budget, or the OMB, establishes a fixed materiality amount for all single audits. So if you know anything about this, then you might know the answer. But if not, if this is all pretty fresh about single audits, that's okay. We're going to use this question to learn about this. But if you need to, maybe pause the video and read through these to kind of give it your own thoughts, kind of give it your own go. And then when you're ready, come back, we'll look at the answer together. Okay, here we are. The answer is A, materiality is determined for the financial statements as a whole and separately for each major federal program. So let's walk through this. In a single audit, materiality is assessed at 2 levels. The financial statements as a whole, using the standard financial reporting materiality principles, so that's, a normal audit, and separately for each major federal program being audited for compliance. This approach recognizes that materiality for compliance testing may differ from materiality for financial reporting. The auditor evaluates whether non-compliance with laws, regulations, and grant provisions could have a material effect on each major program. So the auditor is going to set materiality not just for the financial statements and not just a big, materiality number for the whole audit, including the compliance audit, but they're also going to set materiality for each major program that is a part of the entity in the single audit. And we're going to talk a little bit about major programs in another question, so don't worry about that. But again, they are going to have different materiality levels for these 2 different things. Now with that, let's go to the next question. All right, here we are at question 4, and something I always like to point out when it's an option is you want to read the last part of the question first, read the last sentence of the question first, because typically that will give you context for what the rest of the question is about, and it will give you that little bit of a boost to know what to be looking for throughout the question so that you can answer the question more quickly. This will be very helpful when it comes to test day because you have no idea what you're going to be seeing in the questions. So again, getting that quick context at the bottom, if it's there, will be very helpful. So let's do that here. How does the auditor decide which programs to test as major programs? Again, imagine you were on test day and you read that last sentence, you immediately know you're dealing with major programs. And if you've been studying and you know your stuff, then you probably will kind of have an idea, oh, I think I'm dealing with a single audit. So then you start reading through this already with an idea of something that you think you're going to be dealing with. So let's go up to the top. An auditor is conducting a single audit for a nonprofit organization that expended federal awards across multiple programs. The auditor must determine which programs to classify as major programs for compliance testing. So again, how does the auditor decide which programs to test as major programs? Let's go through the options. The auditor must test all federal programs the entity participates in, regardless of size or risk, to ensure full compliance. Option B, the auditor applies a risk-based approach, considering factors such as program size, prior audit findings, complexity of compliance requirements, and inherent risk. Option C, the auditor selects major programs based solely on the percentage of total federal expenditures, automatically testing the largest programs until 50% of total federal awards are covered. And then option D, the auditor relies entirely on management's classification of major programs as long as management asserts that they have complied with federal guidelines. Okay, so which one of these is going to be the correct answer? Again, if you have no idea, that's okay. We are using the questions to learn the material. If you want to give it a try, pause the video and think through this yourself. But if not, let's go ahead and look at the answer together right now. All right, here we are at the answer. B, the auditor applies a risk-based approach considering factors such as program size, prior audit findings, complexity of compliance requirements, and inherent risk. So let's go through this. In a single audit, auditors determine major programs using a risk-based approach outlined in the uniform guidance. This approach considers both quantitative factors such as the relative size of the program and qualitative factors such as prior audit findings, complexity of compliance requirements, and inherent risk. Programs with higher risk are more likely to be classified as major and require additional compliance testing. This process ensures that the auditor focuses on the programs most likely to have a material impact on compliance and financial reporting. So how do auditors decide what a major program is? Without having to go into a ton of detail because you don't need to know this extremely deeply, they use a risk-based approach to kind of consider the different programs to see which one they think is going to be a major program. So that's the idea in a nutshell. Now let's go to the next question. All right, here we are at question 5. In a single audit, how does an auditor identify federal awards subject to audit? So let's go through the options. Option A, the auditor reviews the entity's revenue sources and identifies funding provided directly by federal agencies or indirectly through state or local governments. Option B, the auditor classifies all government-related funding as federal awards, regardless of whether the funds originate from federal, state, or local sources. Option C, the auditor only considers cash grants as federal awards, excluding non-cash assistance such as loan guarantees or donated property. Or option D, the auditor relies solely on the entity's management to determine which funds are considered federal awards without performing independent verification. Okay, so another question, another topic about single audits that you probably don't know the answer to unless you've already gone through this in your review course and you're just trying to do this to review. So pause the video if you want to think about this, but if not, it's okay. We're going to look at the answer to learn about this. All right, here we are. The answer is A, the auditor reviews the entity's revenue sources and identifies funding provided directly by federal agencies or indirectly through state or local governments. Okay, let's walk through this. Federal awards include funding provided directly by federal agencies or indirectly through pass-through entities, such as state or local governments. Auditors identify federal awards by examining grant agreements, contracts, and other funding documentation to determine the source and nature of funds. Federal awards can take various forms, including cash grants, loan guarantees, donated property, and federal cost reimbursements. So these are all different things that can count as federal awards. And here's some examples. A nonprofit organization receiving a grant from the Department of Health and Human Services, or the HHS, would be subject to a single audit if it meets the expenditure threshold. And then another example, a university receiving federal research funding through a state agency is still considered to be expending federal awards because the funds originate from a federal source. In this case, the state agency acts as a pass-through entity and the university is a subrecipient, meaning it is subject to compliance requirements for federal funds. So it doesn't have to be directly from the government. It can be from an entity that received it from the government. So again, in this case, the university received it from a state agency. So the state agency received it directly from the government, but the university received it from the state agency. Again, it was kind of like a pass-through. So the university is considered a subrecipient and they may be subject to a single audit if they went over the threshold that we talked about, the $750,000. But the idea here is that federal awards can take on multiple forms. They can be cash, they can be loans, they can be donated property, they can be federal cost reimbursements. So that shows that it can also be non-cash because, donated property is non-cash. It can be all these different things as long as it comes from a federal source in some way. So with that, we've learned a lot about single audits in the first 5 questions. Now, before we do anything else, let's do one more part of the SuperfastCPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice things that keep popping up. You've seen 2 or 3 or 4 questions trying to teach you what a single audit is or what the requirements are for an entity to have a single audit or whatever the case is. Again, you notice these things throughout the questions and you write them out in your own words as the pillar topics of what you learned that day. And as you're doing this each day, you're building your own personal repository of the most important things you learned from the questions in your own words as the pillar topics. So let's go ahead and take a look at the pillar topics for this video. Okay, here we are at the pillar topics. Let's just dive straight in. First off, what is a single audit? A single audit consists of both a financial statement audit under generally accepted government auditing standards or GAGAS and a compliance audit of federal award expenditures, ensuring that federal funds are used appropriately. When is a single audit required? Now, I just want to make sure this is clear. You probably won't be tested on this $1 million. Entities that expend $1 million or more in federal awards during a fiscal year, and it was previously $750,000 before October 2024, must undergo a single audit to assess financial reporting and compliance with federal regulations. So I just want to make sure that's clear to you. Currently, it is $1 million as far as I understand it. That changed recently in October 2024. But you will most likely still, as of March 2025, be tested on the $750,000 number. So that's the number you want to know, but just remember that it is $1 million currently and that it will probably change in the not so distant future for the CPA exam as well. But as far as I can tell, they're still testing the $750,000, not the $1 million. But I still kind of wanted to make sure that that was there for you to know. Now let's talk about the next one, auditor responsibilities in a single audit. What does the auditor need to do? The auditor must assess compliance with applicable laws and regulations, evaluate internal controls over compliance, and determine whether management has identified laws and regulations with a direct and material effect on the financial statements. And then let's talk about determining major programs in a single audit. Auditors use a risk-based approach to identify major programs, considering factors such as program size, prior audit findings, complexity of compliance requirements, and inherent risk. And then finally, let's talk about identifying federal awards. Federal awards include grants, cooperative agreements, loan guarantees, and other forms of assistance provided directly by federal agencies or indirectly through pass-through entities like state governments. auditors must review funding sources to determine which funds qualify as federal awards. So we learned a lot in just the 5 questions and the pillar topics, and that is the end of the YouTube version of this video. Remember, we are only going to go over the 5 questions, but SuperfastCPA CPA Pro members are going to get access to the full 10-question version of the video when we post it in the member forum. So if you like this and you like our other videos, make sure you check out becoming a SuperfastCPA CPA Pro member so that you can get access to the full versions of these multiple choice question walkthrough videos. And the easiest way to become a pro member or to learn more about it is actually to go to SuperfastCPA.com and sign up for our free 1-hour webinar training. You'll learn a lot more about SuperfastCPA in general, and that will give you a good path to learning about the pro course and becoming a SuperfastCPA Pro member yourself. So make sure you check out those things. If you liked the video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.